Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief. We're seeing a bit of life on Wall Street. We got a pretty good bounce going after the big sell-off yesterday, and all this is coming really just ahead of Trump's State of the Union speech later on this evening. And then also you've got the increased violence that's really starting to develop into a large-scale, I won't call it crisis necessarily, but it's definitely expanding in Mexico. So there's been a lot of talk about the United States lending military aid to Mexico in the very near future. We know that Trump's going to talk about this situation plus the Iran situation tonight at the State of the Union. We're seeing some bullish price action, though. We are seeing a few bidders get in there and decide that they are going to go ahead and take a long shot on stocks. To me, it's not necessarily a bad play anytime you get a huge bearish move, but there's always that risk that the trend is going to continue and get worse and worse and worse. So let's get out to price action here. We had a question right over here in the YouTube live chat. Wanted me to look at at gold. Let's just go ahead and look at gold right now. Get this sort of out of the way. I know everybody loves gold. Everybody trades gold. I don't know that gold is that great of a market to be trading right now. Now, if you're trading it and you're making money, God bless you. Keep doing it. Don't let me scare you off of the gold market. However, what we are seeing is really just, I won't call it slow price action because you're off about 1.25%. That's a significant intraday move, but it really is chaotic. I mean, you're up one day, you're down the next day. The market really doesn't have much of a direction. We really are looking for this thing to finally break from 5,000, and I don't know that we're going to get it. So let's go and take a look at our technicals. This is your 12-month chart. We sort of been drawing a lot of these long-term zones for our analysis lately, and it's the reason why is it's early in the year, and I want everybody to know where these retracement levels are, where these potential entry points are. So 4,000 is absolutely fantastic. You could not argue with that trade location. Now, of course, that's a yearly chart, so we're a ways off of that. Let's take this right down to, say, a 4-hour chart. All right, so 5,000 is the big deal, and we talked a lot about it, saying, listen, this probably is going to be an area potentially where you could bid. Well, that's how I would be approaching gold right now. Now, you're printing right around 51.65. I think 5,000, you've got a pretty good demand zone. You've got a pretty good demand zone sort of set up right in that 5,000 zone. More than likely, that's going to be a pretty good bullish location for a nice intraday scalp. I wouldn't be taking a position off of 5,000. We do have some news events that could potentially shake the gold markets up. But for right this minute, I'm looking for a deeper pullback. I'm not interested in holding longs from 5,165. I'm not interested in it at all. I want to see a deeper pullback. And what I mean by that is I want to see this market actually commit, wash out some of those retail longs, give us an opportunity maybe to get some of those retail folks thinking that they're getting a real discount on gold down around 5,000. Now, that psychology really could build us into a positive trade. You can see on the daily, sort of a compression break. Nice big bullish break here in about the last week. But big picture, have we really left the 5,000 level yet? Not yet. Not yet. It feels like it. Yesterday, it really looked like we were going to get that type of price action. We tested the water up above that weekly high and just reversed right down to the 38% level, which is right around 5,095. That was a beautiful trade. No question about that. As far as what could we be looking for right now, I really like 5,000 down there. So this scenario, to me, is setting up beautifully. If we do see a nice big pullback in gold to 5,000, I think it's pretty much a no-brainer that you want to take a bid from that zone, maybe looking for $5, $10, $15. Pretty good stuff. That's what I would say. Pretty good stuff. It's good to see everybody back on YouTube land. Welcome one, welcome all. So that's what I think of gold, Forex psychiatrist. I'm confident that we're going to get a trade there. We're just going to have to be a little bit more patient. Let me see. Babjeez. Hello, Shane. Today was a slow day for me. Will the Dow go back to 50,000? It looks like it. I mean, 49 right now, the Dow's at 49,250. You're up about 1% on the day, about 450 points. It feels like it. It feels like you're going to go back to 50,000, but I'm still a little skeptical. I think that the geopolitical uncertainty surrounding Iran, surrounding Mexico, all of a sudden Mexico is in that mix. That is a border country here in the United States. The violence is escalating. And it's cartel violence. It's something that's been gone on for a long time, but we haven't seen it on this scale. Many people believe this is just the beginning. We don't know what's going to happen there. Trump did mention that if Mexico asked for military support, they would be sending military support. Let's just cut through the BS. Bottom line is you have about half of your military assets in the Persian Gulf right now off the coast of Iran. You're talking about maybe sending more military assets to Mexico if the situation's warranted. You also have assets down around Venezuela still. This is really being spread very, very thin here in the United States. So to me, when I'm starting to hear what I'm hearing out of, the talking heads, the political pundits, also folks in the administration, it really does feel like something big is going to happen here. I don't think it happens today. It's going to happen after the State of the Union speech tonight. But I think you could be in for some big-time fireworks in the next month. And we're going to cover more of this as the week goes on. But for today, we're going to talk about consumer confidence. I'm going to give you a market rundown and maybe a few things that we can look at with our 9 EMA. There was a couple trades earlier today that weren't too bad, but really an interesting dynamic here as we roll into midweek trades. So good to see everybody back. Babjeez, yeah, I mean, maybe 50K, maybe not. Jason, good to see you, Jason. Welcome. Pack up. Hi, Shane. I hope you're good. Don't you think AI is to blame for the current market fluctuations? I think it plays a role, Pack Amp. I do. I think AI is certainly undeniable. It's an undeniable force. And the AI traders, the bots and all that are bringing volume. I was watching WTI crude today. I was trading WTI crude, and there was a couple of instances where we saw major sweeps. We saw major sweeps in the market and big-time volume coming from those momentum algorithms, which are incredibly aggressive. I mean, I could show you a few one-minute candles in that U.S. oil market that are a bit alarming because they come out of nowhere and the volumes really are huge. So I'm interested in AI, of course. We use AI for seemingly everything now, everything from logging your calories to helping you build algos and bots. So yeah, I think it's a good point, Packamp. I really do. We're just gonna wait and see how everything pans out. You know, I'm optimistic. I'm an eternal optimist. Even on some days you don't feel like being optimistic, you sort of have to be optimistic if you're going to be a trader. You want to make sure that you do as well as you possibly can, and it is really hard to do that if your mentality is negative. It really is. So good to see you. Yes, sir. Welcome. Tina Jing. Good to see you. Tina, welcome. Gold, I'm looking to sell. Forex psychiatrist. Well, I mean, go ahead, take a shot. I personally, I think picking any direction in the gold market right now from this location is very difficult, very difficult. T Marina, good to see you. T, welcome. Let me see. Dollar yen did its thing, kind of choppy in the Asia session. Explosive move on the London Open. Happy Tuesday, T. Happy Tuesday to you too. And CK, what do you think? There will be a huge volatility during the Trump speech. Yeah, there's a couple of issues that we're going to be watching for. And the verbiage could send the markets directional right away. I'm going to go ahead and cover those in just a second. Say hi to everybody out in the How to Trade community. Good to see you, Tuku, Bobby Bob, Ralph H., Andrea Garwal, Steve Francis in the leader. Good to see everybody there. I think it's going to be a nice, fun week to be trading. Not really two big economic events that we have to deal with. Our schedule is relatively tame. This is what we had Monday was quiet. Today was CB, consumer confidence. Not really a huge number, but we do need to look at it. Trump's State of the Union is actually tonight, Tuesday p.m., but that's going to be after that Wednesday Forex Open. So be ready. Be ready. I believe it's 7 o'clock Central Time here is when the coverage kicks off. So that's about 6 o'clock my time, 8 o'clock Eastern. Just remember, Trump's almost always late. So I'd be surprised if that doesn't kick off probably 8 o'clock my time, 7:30, something like that. So be ready. Be ready after that Japan Open, the Japanese Open. You could definitely get some volatility, especially in those yen pairs. Thursday's jobless claims, I'm not really too excited about that. I don't think we're going to see that move the markets at all. And then Friday, nothing. No donation Friday. There's not much going on this week on our economic calendar, and that's a good thing. Let's go ahead and take a look at our consumer confidence numbers. CB consumer confidence for February had a pretty nice jump after a dreadful month that came across the board in January. It was not good. You can see it came in at 91.2. That's above 87.4 and above the previous release of 89. The Richmond Manufacturing Index, I just don't care. It's not a market mover. Richmond Services Index, it doesn't matter. Both big negative numbers, though, so that suggests that potentially economic output out of those sectors on the East Coast probably aren't faring as well as we thought maybe they would be this far along in the Trump's second tenure as the president. Wholesale inventories month over month, December, that means nothing. The only thing you would ever look at wholesale inventories for is big spikes. And personally, I'm not really too worried about that at all. Now, this is the conference board. I thought it was chart book, but it is the conference board consumer confidence index. Sort of an interesting type of a metric. You can see that basically what you're doing is measuring business conditions and trying to predict whether or not a recession could be on the way. Let's get out here so you can actually see this thing. U.S. consumer confidence inched up in February. Interesting stuff. Increased by 2.2 points to February, 91.2, from an upwardly revised 89 in January. This is the present situation index based on the consumer's assessment of current business and labor market conditions decreased. So the optimism still isn't great. It really isn't. It's actually kind of weak. Confidence ticked up in February after falling in January as consumers' pessimistic expectations for the future eased somewhat. Well, I wouldn't get too carried away. This is the chart that I always show when we talk consumer confidence. Remember, lagging confidence typically means to reduce consumption. Reduced consumption typically leads to economic contraction. So that's what we're looking at here, especially when we're talking consumer confidence. This is what I always point at. This area right up in here, this is pre-COVID. Right there's your COVID crash. This is an area that we haven't even approached. So do we feel as good as we did before 2020? Not really. Not really. This goes back to the financial crisis of 2008 to 2012. That was really ugly. 2008 and 9 really was the kickoff of that, and you sort of spent the next probably 8 years working out of that recession. You can see that confidence was really near all-time lows, and then there as you build back to these euphoric highs, and the COVID really depressed things, and you still haven't recovered. So I always go back to the COVID era because I believe that it was really a big deal. Not necessarily for our markets and what we're pricing things at, but for sentiment, for economic growth. What do we think about the state of the economy after COVID? It has not recovered. And I always go back to that. I say that really is the new era of finance. Unlimited quantitative easing, tons and tons and tons of money hits the system. Things like crypto and stocks go through the roof, yet the standard and the quality of life, the quality of living, your expenses across the board have gone up in a big, big way in the last 5.5 years. And there's just no denying that. There's no running from that anymore. There's no question that the inflation is entrenched. So if inflation is entrenched and we seem to be in a state of, a policy cycle where we're not going to raise interest rates, what does that mean for stocks? What does that mean for crypto? It's probably pretty good, right? Now I'm going to show you two different charts here, and we have a trade idea out for Bitcoin. I want to review that because it's coming into play as the sellers keep dominating Bitcoin. But this US 30 market, this is it. I mean, this is an uptrend. This is a long-term uptrend, textbook long-term uptrend. Really a robust gain since last April's tariff panic. And then you go back in your way back machine a little bit further, and that's March of 2020. I remember that very well. Very well. We were going limit down almost every night because of the COVID pandemic, and those lows really were the bottom of probably the new era of stock market valuations. And listen, there was a lot of people that bought down there. I knew some of them. I bought some stocks when we saw the massive crash. Some of them you did very, very well, very, very quickly. Some of the folks that made the long-term plays, as you can see, are really wealthy. And so when we start looking at, is this thing going to go back to 50,000? More than likely, the US 30 is going to be there. I don't really see any way around not retesting that zone. When does it happen? Does it happen this month? Probably next month. Probably in March. I think that you're going to get a nice big rush in March, and that's sort of normal to get good participation, solid participation through the month of March. I would expect this to be bullish unless we see something really change the overall market dynamic. So for me, I'm looking at this 47,750. If you could get a pullback down in there, pullback bids from there would be absolutely fantastic. Now, where are we at right now with this US 30 market? Sort of choppy. You can see we were up there right around 50, and then we got that big break. Remember, we were trying to scalp right in front, and then we finally got that big washout that came across the board on the 12th of February. And since then, it's been tough. It's been tough sledding. Doji. A little bit of an inverted hammer, bigger ranges. Now the volatility picks up. Big sell-off yesterday, pullback today. Which way do you want to be in this market? I have no preference. I don't want to be long. I don't want to be short. We've got to see something happen in this thing. We've got to see a move that's going to give us a chance to buy a discount or maybe sell a premium. That's it. That's all there is to it. And when these markets start rotating back and forth and you see a 400-point range and you're going, man, we still just haven't really done anything, a lot of times it would be pretty good maybe to stay out until this thing picks a direction, and you have an opportunity to step in with a little bit of confidence. Now, for me, you probably could sell right here. You probably could sell your moving average, your 13-day moving average, 49,415. That's probably a great late-day scalp. It just depends on if you, in fact, get that extra 100 or so points that'll get you involved right before the close. That really is a good look at the US 30. That was a good question. We did have a trade idea on the US 30, and this was sort of it. And essentially what it was just a pullback buy. That's all it was a pullback buy from our long-term level there on our monthly chart, 38% retracement. That one, if it does come into play, we'll have a chance maybe to trade it, but if it doesn't, that's okay. We'll just go on to another market and find something else to do. It's as simple as that. Bitcoin on the bear to open week 8. Well, now week 6. This trade idea, about 15 days old, 2 weeks old, 3 weeks old. And what you've got right here is you've got an interesting dynamic facing Bitcoin. I get a lot of questions about crypto. A lot of you trade crypto, and that's great. I don't have a problem with cryptocurrencies. But what's happening this year is we're not seeing the bullish price action that personally I predicted. I said this is going to be potentially a very bullish year for Bitcoin and crypto. Why? I'm looking at rate cuts. I'm looking at deregulation. I'm looking at the Trump family's own investments in the crypto sphere. And as soon as you see the institutional adoption, you see hedge funds moving into crypto, you see billionaires moving into crypto, you probably have a pretty good hint that crypto is at least not going to crash. It's probably going to at least hold its value and maybe tick higher. That's what wealth appreciation is. That's what value over time growing. That's what it's all about. And so we had some problems this year. We've had issues in the crypto sphere. We've had ETFs. All of a sudden, we're liquidating assets. That theoretically, it put a lot more Bitcoin on the open market. When you get a bunch of something that hits the market, price goes down because there's an abundance. Well, are we getting back to scarcity? Not just yet. Not just yet. Now, I'm really fairly confident that the long-term prognosis for crypto, I'm sort of a bull. I'm not excited about buying 63,000s in Bitcoin. I'm not interested. To me, I think that this could get worse. And I think a lot of it has to do with the Epstein files. We talked about that yesterday. I'm not going there again, but it would be silly to deny that there's something out there facing crypto that we don't know. And I've always been a big believer in insider information. I've always believed that the term asymmetric information is very real. Now, when I was in college, when I was getting my degree in finance, they told us there was no such thing as asymmetric information. And I said, that's a fallacy. The people that are on the inside of the crypto market know more about it than we do. That's asymmetric information, all right? That's no different than somebody inside of a company understanding where maybe the investments in that company are going to lie over the next 9 to 12 to 18 months. That is asymmetric information. Now, a lot of people believe that all the information that's available is included in the price, in the current price. I do believe that, and I don't believe that. I'm not trying to have it both ways, but if somebody knows something about crypto that no one else does, it's potentially a major edge, and it feels like this market's not done going down yet. We have not been able to get reestablished up above 70,000. That's a big deal. I mean, this is a 12-month chart. 50% retracement of this 12-month range is what? It's right around 58, or excuse me, it's right around 70, or 62% is right around 58, and that's essentially our trade idea. So we've had a really nice run at this level already. 59,930 is sort of your yearly low, really a brutal year thus far, about 26% you're down in Bitcoin. Do we get this market to base out right around 57.8? I think it's possible. It's certainly possible. So the consumer confidence, where does that play into all this? Well, I mean, probably not huge, probably not a huge market driver, but when we're looking at confidence, we're always trying to figure out if the market is strong, if people want to spend money, if they want to invest. And if your markets are strong and you do have a good positive sentiment, you're going to see things like Bitcoin get bought. You're going to see things like Ethereum get bought. And it seems like it's a matter of time. However, it does not feel like this is over yet. And maybe that's just me being sort of paranoid. And, years and years and years, it's right about the time you think you've picked a bottom, it goes and makes another leg lower. So I don't think that if you were a long-term investor, buying 60,000 in Bitcoin is really that bad. But if you're a trader and you're somebody who's going to apply leverage to maximize your returns, you're going to have to be a little bit better with your entries. For me, right now in Bitcoin, I'm on the sidelines waiting. I do like that 58 level, though. I love the 57,800 level. That's fantastic. 62% on a yearly. That's a really robust support level. And if that level goes, if the bidders aren't there to defend it, and if we see the price just take out 57, 58,000, this thing's going really low. It's going to 39 or 40. However, we're not there yet, and we're going to be covering this market pretty much every step of the way, and I think it's going to be a lot of fun because, we can trade. We can trade these things. We don't have to make a decision right now if we're going to bet the ranch on Bitcoin to the long or the short. We can trade them. We can get in and out. That's one of the advantages we do have. That's one of the few advantages that you have over JP Morgan's trading floor. They have more money than you. They're more sophisticated technically than you. They get better fills than you do. But you don't have to trade every day. You can get out of positions because you changed your mind. It's not that easy when you're JP Morgan and you've got 500 million in Bitcoin and you're saying, well, do we start unwinding this position or what do we do? So you do have some advantages over those guys, but not many. Not many, believe me. Let me see. Andrew, good to see Andrew. Welcome. What do you think about silver? Yeah, good question. Let's go ahead and see what we can get going in silver here. Let me see. How's your trading week been this far? Let's see, Team Marino. Oh, yeah, good banter in there, guys. I always like it when the traders talk to each other and start maybe trading some ideas in the live chat. That's fantastic. That's what this whole thing is for. Let me see. Matthew Biggs. Hi, how's things? I'm doing well, Matthew. I feel pretty good. Sort of fought back. A little bit of the flu over the weekend. A lot of excitement with that gold medal hockey game. So sort of getting back on my feet, which typically happens on a Tuesday. I'm pretty much born again Tuesdays and Wednesdays. And start really hitting stride Thursday, and then Friday it's time to shut it down again for a couple days. But I'm in an interesting position here this week. Sort of been slow. I've been scoping out a trade on WTI crude that it just doesn't seem to want to develop. So I'm probably just going to bag it for today. I'll come back. We're going to take a look at that State of the Union address, and we got to do a few things. We got to do a few things on the 9 EMA too before we go any further. So I'm going to go ahead and do that right now. Ralph H., how bearish are you on the yen? Yeah, let's go ahead and pull a yen chart too. That's a great thing to look at. I know a lot of you are trading the dollar yen, and we can look at it right here on our 9 EMA strategy. So this is one of the strategies that we've been putting out there the last few weeks. A lot of you have shown interest in this. Got a lot of great feedback, a lot of criticism too, but that's okay. Remember, strategies, you don't have to like a strategy. You don't even have to trade it. But we get a lot of questions about strategy. I want strategy. I say, well, here's a great place to begin, the 9 EMA. It's not perfect. You're going to have to do some of the legwork yourself, finding out your own risk management and how to manage these positions. But you really do need to be in sort of I would say, not necessarily a strong mental or not a strong mindset to trade the 9 EMA. You just got to be inquisitive. That's about all there is to it. I'm going to show you an example of one that we've got rolling right here on MT5. Remember, that strategy pack, you've got everything you need in there. We got the EA that I built. That video, I show you how to get up and running with the strategy pack. We've also got a PDF in there that shows you everything you need to know. And we've also got another full-length video at the bottom of that page. So if you're interested in the 9 EMA, get on it. It's right there for you. This is a 30-minute gold chart. Now, this is a great example of what this 9 EMA is designed to do. It's designed to get you in and out of the markets with structure. That's all a system is. That's all a strategy is. I've got questions. Shane, what about the back testing? Are you going to build a back tester? I go, I don't know yet. I don't know that that's the best thing to do. I really don't. I mean, I've got one programmed. I've been trying to code it at MT5. It's been more of a headache really than anything. But as far as the back-tested results would go, I'm probably not going to put those out in the public eye just because there's so many different ways to interpret them. One thing I want to make sure that everybody understands is I'm not a signal provider. I'm not a financial advisor. These streams are for education. I'll show you some of the plays that I'm looking at making, and then some of the strategies potentially that we're sort of putting out there as a great place for you to begin your career. I mean, I would be hard pressed to find a strategy that's as easy to understand as this 9 EMA, and I don't say that in a bad way. I think that it's easier from my life has always been better. The easier things are, the better they go. And so right here, this is fascinating stuff. So there would be your bid, which would be just our gold arrow. The market was in oversold territory on the RSI. You got a bullish crossover and a bullish close above the 9 EMA. There it was. There was your bid, and you're looking to bid this thing, and boom, you're in positive territory. Just barely though. I mean, this market really hasn't ticked too much higher since our entry. But your profit target, now that's the big question. Shane, where do you put your profit targets? And I go, it's up to you. It really is up to you. 1-to-1 risk versus reward. I really like that one. 1-to-2 is probably a pretty good one. How about market structure? How about just, hey, let's go up to the top of this bearish market structure here and shoot for that top, 52.33, something like that. The thing that gives you an opportunity to do that is where you have to get out. So if this market reverses against you and comes down and knocks out this swing low, you probably need to break. You probably need to go somewhere else and do something else because it more than likely is going to come way off. Now, you had a fantastic sell signal right here and got caught in a major bearish move today right up near the top of the daily range. That's a fantastic trade. That's exactly what you're looking for. Really nice timing on that as well. And you saw that you sort of got in really towards the beginning of the week's action. That was a good trade, no question about it. This one, are we buying it back with confidence? Pretty good trade. Pretty good trade location. We'll wait and see how it develops. I don't know what's going to happen here. State of the Union coming up. We're probably going to see some action out of gold in the next 12 hours to 24 hours. Could be interesting. All right, let's go ahead and take a look at the dollar yen, and I'll give you my own opinion on the dollar yen, Ralph. This is sort of a good look at a chart, that 15-minute price chart on this 9 EMA, I get a lot of questions about what is the best time frame to trade. And I go, man, I really try to stress that you've got to have your timing dialed. I mean, you've got to be in the market when it's at its most active. For the dollar yen, I think you can do this right around the Tokyo Open, and you can also do this during the London U.S. sessions. I think that's a pretty good time to be trading this. As far as what we had today, just on a 15-minute chart, okay, you got a really nice follow through there. You got, I sort of got swept out, lost there. That's a pretty solid move, about 45 minutes. Nice big move there. Swept out here. This is nice. This is interesting. It's a tough trade, but it's going back positive, stop loss right above that swing high. So you got a chance there potentially to take some profits on maybe 3 or 4 trades, and that's what it's all about when you're systems trading. I mean, if you're winning a high percentage of a systems trade that's on an intraday basis, you've really got something. Now, always remember with this 9 EMA is that a lot of times your chart and your signals or your trading indicators or whatever you want to call them, they are going to get choppier as you go down in chart duration, especially if you're using minute charts. Now, theoretically, if we were doing this for real, I would have to make a serious case. And I mean for real, like if we were going in front of, let's say we were going looking for venture capital, and I was in a meeting and I was talking to some people that wanted to put some serious cash behind a strategy like this, we probably would have to dial it down to a tick. We would probably make the transition to a tick chart to get that pure unfettered price action. However, you don't have to do that. You don't need to be sitting there going, is it a 1,500 tick chart or a 1,000 tick chart? That's really tough. That's really tough, especially on over-the-counter markets. So what we do is we focus our efforts when the market is at its most active. So this right here, dollar yen 30-minute chart, not a bad duration to be playing at all. I'm a big fan of the 30-minute chart. So what did you have right there? There was sort of your sweep early in the session, and then you came down. Sort of there was your sell. It went against you, but having that stop loss where it should be, check the videos out. That stop loss right there saved you, and now you're back in the money. So to answer your question, Ralph, how bearish am I on the yen? Well, I would have to say that my personal market reads, I'm sort of lining up against the dollar at this point. But I don't think that now is the time to be, sort of betting the ranch that the dollar is going to fade away into oblivion. And the reason why is our rate cuts. Our rate cuts aren't coming for a while yet. Now we're going into March, April, May. We're probably going to get our first rate cut in June. That's going to be with the new Fed chief, which is supposed to be this Kevin Warsh gentleman. However, I've mentioned it in the past. I'm not going to go into it deeply right now. Warsh is showing connections to the Estee Lauder fortune, which is tied into Epstein. So it doesn't matter what you think of anybody. None of that matters. What matters is if somebody's name that's up for a big time position this year is associated with those Epstein files, you're probably going to see a firestorm in Congress, and that could at least delay somebody's confirmation. We have to at least consider that as being a possibility. Now, I'm not saying it's going to happen. I don't know anything about Warsh. I don't know anything about the conspiracies flying around Washington, D.C. right now, but I do know human nature, and I think we all know it, is when there's a scandal or a controversy, that can slow things down in a big, big way, and the confirmation of Warsh could definitely be one of those things that gets slowed way down. We've already had threats that they were going to derail his confirmation based on the DOJ investigating Jay Powell. So all of this figures into that, something like the yen. Okay, Shane, what do you think? I mean, well, in my opinion, I would probably be lining up this dollar yen to the downside. And what I mean by that is I would say, okay, where are we at with regards to our longer term time frames? Monthly chart is beautiful. I mean, it really is great. I mean, I've been saying beautiful a lot this week because we are starting to see that fractal geometry, that structure in the market that we want, that we have to have. And then you got that spike low right there, spike high, 38%. That's a big time zone, 154. Okay, we're looking at that. 50%, 152 and a half, and then 62%, 150. So to answer your question, Ralph, it would surprise me if you didn't get a test of that 150.81 level. Now, you can't really sell from here. And the reason why you can't sell from here is because you do have a lot of support zones, and there are going to be some bidders. But take a look at what you're going to have on the board for March, potentially. March is going to be an interesting time to be in this market because you've got a couple of things. Number one, you got an inside month setting up. Take a look at the highs and the lows. Now, when we're right down here, we're thinking, okay, we're going to break beneath January's low. We're going to open up the throttle and go down there and check out 151. Maybe we're going to check out 62%. It didn't happen. The bidders stepped in and they defended this market. The sellers have defended this upper Bollinger Band, and now you've got just a real quiet rotational market inside of January's range. Now, always remember that the market tightens up before it explodes. This is one of those that I'm looking for a directional move. It could come either way. You could see a big bullish move here in the next month or so before you do get a retracement. Or you could see just the straight retracement break beneath February's low and go down there and check out a support zone. So right now the jury's still out for me, Ralph. I can't just call this market and say, okay, it's all down from here, because there's too many technicals in there. There's too much support. The bottom line is 154 is big, 152 and a half is big, 150, 151's big. So I wouldn't just call for a market crash based on that alone. I mean, there's just too many areas where the bidders can be. So to answer your question, I would probably be firmly on the sidelines with this pair if we wanted to do something like this potentially. We're going to look at that Swissy here in just a second, but you've got a daily chart. Maybe you pull up this 920 EMA crossover, and you can start to see what's developing here with your dollar yen. I really like the daily chart, especially for a 920 EMA crossover, and you can see your 9 is sort of creeping on that 20. So it may develop in the next day or two that we do get a bullish crossover. And if that was the case, then we can easily build our trade to the top side. We could do it in a structured fashion, meaning we know exactly where we have to get out once we get a signal. But right now, we don't have a signal. Theoretically, you're probably still working this sell maybe. Some folks maybe are looking for this downside. But to me, the market's flattened out. I would probably be looking for potentially it's just really hard to say. I'm not even going to venture a guess. I would fall back on my systems, my strategies, something like the 920, maybe the 9 EMA, to sort of give me forward guidance on where we're going. We have a pretty good idea what's going to happen with the U.S. dollar. We really do. We have a pretty good idea that, we're sort of holding on. It's probably a little stronger than we thought it was going to be. Here's a DXY dollar index. You see you've got a buy signal setting up here. You had the big sell, and you came right down there to 96 and a quarter. But from a broader perspective, especially, let's just take a look at the time frames. Especially, say, on a monthly, there you have it. You're still bearish. You're still very bearish. No question about it. Right there, you've got the May. That would be a monthly crossover right there. And now we're just sort of loading up. You'll notice we pulled back and failed at that 9, 1, 2, 3 times. The trend is down. I really am looking for the bottom to fall out of this dollar at some point this spring. But I think it's going to be probably more towards the end of April, if I had to guess when. And that's going to drive this. It's going to drive the dollar directionally against all of these pairs. No question about it. All right, I had a question about silver. Let's go ahead and cover silver real fast. As far as, what do we think is going to happen with silver? It's about as easy as our gold analysis. I feel like the move's sort of done. The big move, the explosive move up to 120. When we were up at 120 in silver, there was a lot of heads out there, a lot of talking heads, a lot of metals industry professionals that were talking 300 for silver. Okay, that's clearly there's sellers involved. All right, 120 sellers, whoever stepped up and sold, this was a combination of profit taking, no question about it, but it was also a combination of fresh shorts coming on the markets. To see that kind of sell off from a 121 level all the way down to 64 or 60, clearly somebody was naked shorting in there. There's no question about it. So are those shorts gone? Have they been absorbed by the market? And is the path really back up to 120 clear? Well, we finally broke from 75, and that's a good sign. We're up around 87.50, something like that. What would we want to do now? If you wanted to buy this market, I wouldn't blame you. I just would want to get a better trade location. So right here, you sort of had a daily sell. That didn't work. Now you're trending back up against that swing high. You've also working sort of a buy on that for a daily. Probably if you get a daily crossover there in that silver market, probably not a bad idea to be considering the long side. I do think that eventually you're going to have to fill some of this in. That's an absolutely huge move, 30th of January. Remember that? We're off at one point 30%, 33%. That was the big fall. But what happens with crashes like this is these areas typically get filled in. They typically get filled in. Now, we're not there yet. We're going to have to see a little bit of bullish price action here. But maybe a shot up to about 100. That's not necessarily out of the realm of possibility, but this crossover, this 920 is going to have to develop first before we start talking about, realistically, okay, the worst of it's over. Now we're going long. You'll see $75 was definitely a compression area, really a severe compression area going back to last week. We traded 75 religiously, and now we've sort of broke. So if I was going to just put out a real basic trade idea, you have really two ways to look at this chart, in my view. Number one, if your 9 crosses over your 20, probably could consider a buy just because you can stop yourself out maybe down here or beneath the trigger bar, the signal bar. Nothing wrong with that. You could also work it from that swing low to this top side extreme. Maybe wherever this lands or wherever your upper extreme is, a pullback down around 75. It's probably pretty good. I mean, that would be the same type of play that I would be considering taking on gold. Just gold from 5,000, silver from 75. Those are great trades. Those are trades that give you a really high probability of joining the bids from that zone and making a little bit of money. Now, the rest of this, I don't know how high silver's going. I don't know that we revisit $120 anytime soon, but this looks like you're going to rally and take a shot at 100 again. And I think that's doable. And so if you were going to look to get an entry at maybe 88, 89, depending on how this market sets up, and you have a firm out, maybe on a daily 920 crossover, EMA crossover, then you probably got a shot at it. Then you probably got a pretty good shot at it. So something to think about there if you're looking at silver. But for me, I'm not really too interested right now. I either want to see a technical play set up or I want to see that big pullback down to like 75.50, somewhere in there. And then we can go ahead and get involved with a little bit of meaning here. Let me see. AJ, hey man, how you doing? I'm doing very well, AJ. Thank you. Let me see, Packamp. I'm in sort of a situation. Is it easier to trade high lot sizes and target small pip moves, or safer smaller lot sizes trying to target big pip moves on the Dow and Nas? Well, I mean, that's the question. That's the question, Packamp. That is it. How do you want to make your money? Personally, the way that I target it is I like to load my leverage up front. So if the timing's right and we get a nice position, or a nice technical area that I want to target and it's coming into play, I like my position sizing to be a little bit bigger right at the beginning. That way the market doesn't have to go very far for me to make my money. That's what I'm thinking about. Now, when you start talking about taking your leverage down to the smaller lot sizes and then trying to get in on bigger moves, there's absolutely nothing wrong with that, but you have to have good discipline, and you also have to have good trade locations. Remember, I mean, it's not really enough to buy the middle shooting for the top when you need those big ranges to make up for your big losses. And by big losses, I mean your stop loss locations that are larger. That's essentially what you're talking about. Smaller lot sizes and letting these things run. The problem that I've found out over the years, and I talked about it yesterday a lot, was you don't know how far the market's going. And what'll happen to traders, and I can actually, maybe tomorrow we'll run through some numbers and I'll show you some back-tested results, but it's as plain as day. When you start looking for those 1-4s, 1-5s, those big moves, your winning percentage goes down dramatically. And the reason why is the market doesn't have to move. It doesn't always move. So when you get into a position, say with your NASDAQ or your Dow 30, where it's just a chop fest, you're never hitting your targets. It makes it really difficult. Makes it really difficult to sustain profitability over the intermediate or long term because you're not getting paid. So for me, I always say, listen, I don't know how far the market's going. We have some ideas about where we can go and where potential targets are. But as far as what do we know that when we get good trade location, and by that I mean buying towards the bottom of a range or selling towards the top or getting a really great technical in play, that's where your edge is. That's where your edge is. So I'm looking at my price action. I just want it to be positive and immediate. I don't like taking draws. I don't like sitting around hoping the market comes back to me. I don't like that. I like it positive and I like it immediate. And typically, if I see bidders join me on a buy or sellers joining me on a sell right away, I know that we're in pretty good shape. And that's really what the game's boiled down to and how I've decided to approach it for a lot of years now. And the reason why is it got too hard to try to figure out exactly where the market's going to go. You'd get way ahead. You'd have these big, beautiful trades, and you'd be up a bunch of money, and then the market would pull back, and you'd give all that money back and then some. And psychologically, it just got to be too much. It got to be too difficult. So I wanted to simplify. Simpler is always better. And I said, okay, well, let's go with more conservative profit targets. And if I want to make more money on a trade, then let's just load the leverage on and be aggressive with my risk management. That's all. That's it. So I hope that helps, Packham. Let me see. Narek, I'm going to see. I'm assuming it's going to 40K. If you're talking about Bitcoin, yeah, if 58 doesn't hold, you're probably going to check out 39. That would be my guess. Let me see. Tina Jing, I marked on my chart your 38% Fibonacci retracement on the gold chart last time you showed us yesterday. It was tagged at 2 p.m. here with 1.37 increase if you buy at that price. Well, there you go. That was a good trade. Bounced right off of 38%. I love 38. 38 and 62 are my favorite. I like trading 78. 78's fun too. 50 has not been good to me over the years. I don't trade 50, and I don't trade the 21%. It's not even on my chart. 22, whatever it is. I don't even know what it is. It's not even on my chart. I've seen too many traders just get banged up trying to trade that 25% and 50% areas. Not interested. That's good stuff, though. Let me see. Lebo, hi. How you doing? I'm doing well. Let me see. Sacred, the Sacred Alchemist. Are you trading silver right now? No, I'm not. If I was, I'd probably be dial this thing down, go on over to our 9 EMA strategy. Check out our silver chart, 30-minute silver chart. It's just brutal. Look at that price action right in the middle of your 70-30 envelope, your RSI envelope. That's a pretty good indication that the market is slow and it's not going much of anywhere. However, you've got pretty good volatility off of this low. Nice little move there, but we are flat. And I mean, we are flat. So I would avoid this intraday scalping stuff for right this minute on your silver market. I think that might be a little bit tough to get accomplished. A little bit tough to do there. So I hope that helps, Sacred. For me, I'm just waiting. I would probably be waiting for a pullback. If you could get a pullback down at 75, life would be pretty good. Pullback bid from 75-ish, 75.50, that'd be great. Don't know that we're going to get it. Probably doubt it. But if it does come into play, it may be a good one. All right, we got a lot going on here. Tonight is going to be a big news story. Trump to give State of the Union address tonight amid tariff threats and Iran tensions. So there's a couple of keys that we're going to be looking for out of Trump's speech tonight. Now, most of the time when Trump talks, they're going to go out there and they're going to do a lot of cheerleading. It's going to be a lot of cheerleading. There's going to be special guests there. There's going to be the idea that the narrative, everything's rosy, and they're going to talk about the administration's accomplishments. But tonight's going to be a little bit different because all of that's going to be fine and dandy, and everybody's going to, if you're a supporter, you're going to cheer, and if you're not going to like it. But there are a couple of things that can roil the markets. The first one is Iran. Any hints that the United States is going to take military action, decisive military action against Iran is going to shake up your markets. That's why you're sort of seeing a little bit of a sluggish day on your metals. And also crude oil. Crude oil has just been dead. I've been watching it all day. It's just not much going on. That State of the Union address, any verbiage about Iran is going to be a big deal. And one other thing, too, we got to be aware of is this Mexico situation. This is getting worse, and this is a situation where you've got extreme violence, you've got cartel violence down there, you've got U.S. tourists, but you've also got some people, politicians that are under fire in Mexico. You've also got National Guardsmen are being targeted, law enforcement's being targeted. It really is degrading into a lawless situation, even more lawless than usual. This is going to be a real challenge for Trump to negotiate. Is really going to be a challenge because this is one of those things that could really get out of control, and it is already out of control, but it could get out of control here in the United States as well. And the idea here may be from Trump to try to launch preemptive strikes on cartel forces inside of Mexico. I think that can happen. And earlier today, Trump made a statement. He said, listen, if Mexico asks us for military aid in restoring the order, we will give it. So you may be in a position tonight during that State of the Union address. We're looking for any hints and keys on Iran and also Mexico. I expect Trump to talk tough on both. I think that that's going to be 100% what's going to happen tonight, and that could definitely send your commodities directional. There's no question about it. There's absolutely no question about it. So be careful if you're trading your U.S. dollars, if you're trading your Forex, but especially be careful if you're trading commodity CFDs or spot pairs on that globe, not that Globex, but spot pairs for your metals. You've got to be very diligent because this speech traditionally doesn't do a whole lot to the markets, but it has the potential. And the way that Trump just basically addresses anything that he wants could definitely send the markets reeling. And I'm watching commodities closely. I'm watching gold, I'm watching silver, and I'm also watching WTI, crude oil, and maybe even natural gas. Going to want to be careful with that news cycle. That could be a big one. All right, everybody, I think that's enough for now. We've sort of covered the bases, lots of markets we've covered. I didn't really do a whole lot on the Forex. We'll bring some Forex pairs tomorrow. Feel free to reach out and ask me any question that you'd like over on the howtotrade.com platform. Remember, it's free. Sign up for an account. Send me a message. I will get back to you. I had a request to do some market profile stuff on MT5. I would have to look into that before I do that live. I'm not really sure what exactly is on that MT5 platform with regard to market profile. The reason why is when you're trading market profile or those time price offering charts, like I've been doing the past few sessions, you almost need exchange-based volume data in order to really nail those points of control and different technical aspects that we need. So I'm going to have to look into that market profile on MT5, but I don't know that we're going to be able to do that one. That's going to take me a while to figure that one out. All right, everybody. If there's any questions at all, like I said, be sure to ask them over at the How to Trade community. Check out the 9 EMA strategy. We put that link up in the YouTube live chat. So go ahead and give it a click, get your strategy pack, and get going with it. If you have any questions at all, I'm always around. So be sure to ask, and I'll get back to you in short order. All right, everybody. Have a fantastic trading day. Thank you for joining me. We're going to have a fun time. We're going to have a fun time tomorrow and a fun time Thursday. I really think there's a good opportunity to have a true no donation Friday where we have a chance to just maybe put some of our money in our pocket on Friday, take it easy, and go into the weekend. But the next 48 hours and 72 hours are going to be big. No question about it. Stay on your toes for that State of the Union address. Stay on your toes. All right, everybody. Thank you for joining me today. As always, trade the action well, and we'll talk soon. See you.